Yeah, interesting stuff here as we look at the reaction to this. Although, oddly, I'm seeing futures down. Well, we'll get it. We'll get it sorted. But I want to ask you a quick follow here. You were looking at volatility ticking up yesterday, and a lot of that seems to have to do with Silicon Valley Bank, which I alluded to here, which is a bank that yesterday said it was raising capital, and it lost a bunch of money on its Treasury bets. Now, big banks, when they hold Treasuries, they usually just hold on to them until maturity. But this bank, it looks like, was forced to liquidate some of its fixed income holdings, and it's causing a big ripple effect.
Yeah, the thing is, we have tremendous volatility in the Treasury market, and that creates all kinds of ripple effects and second order effects that we can't necessarily predict. But one of them is a funding crisis at this very special purpose Silicon Valley Bank. And I would kind of liken it to Silvergate, a similar name here, because these are two specialty banks. Silvergate is crypto. This bank that we're talking about here, definitely not into crypto, but more of the VC funding game. Here we see looks like that's actually up about 0.6%. But you take a look at what's happened over the prior 5 days. This stock has absolutely cratered. I saw this stock down as much as 60%, although it doesn't look like that. It looks like it has erased those losses that I was looking at before. So pretty volatile action here. Is this any kind of harbinger of a bank run? Generally, no. I would say this reminds me of Enron and WorldCom 2001, 2002. It was a slow bleed, a slow motion train wreck when we had fallout from the tech bubble. We eventually got a recession, but there was no one big hammer that dropped. It was just kind of a steady dribble of things for years, and it was a bad time to be in the market.
Yes, it was, and a bad time, especially for investors in those companies. Thanks a lot, Jared.